Welcome back to the Market Day Report. I'm Marlon Bowling with you on a Monday. We're going to take a look at what's going on in your ag markets as we get things rolling on the futures trade, and we'll bring in a little extra help. Let's go to the phones. We have a very special guest waiting for us. It's none other than Dewey Strickler of AgWatch Market Advisors, and he will help us take a look at the markets. Dewey, thanks for joining us. Hope you had a great weekend out there.
Yeah, sure did.
I see just hot off the wire here. I grabbed a couple of reports. It says USDA reported overnight sales of corn to Mexico for the 2016 and 17 marketing year of 162,569 tons. So that was a fairly good chunk of corn. But here we go again on the soybean sales. 246,000 tons yet again this morning on the overnight sales. All went to China for the 2016-2017 marketing year. So another basically 250,000 tons of soybeans. That's going to be one big weekly export sales number when that comes out Thursday, isn't it?
Yeah, that's exactly right. We've seen sales increase here to China somewhat recently, and also too, USDA officials in China said that we would probably see exports to China increase maybe about 3 million metric tons. So this has given the market some support.
All right, well, let's take a look at what the markets are doing right now. Let's go take a look at that corn market first. And in the corn, here we have the futures on the early morning trade. No, let's go ahead and take a look at the corn futures if we could there, guys. We'll see what's going on here on the big board. Right now we have the September currently just one tick higher. Now we're trading at 324.5 in the early going, so we're about a penny from our low of the opening range in the overnight session. December corn, Dewey, is down 0.75 cents at 333.5. Now this market is very slow as we kick off the trading week. We have some big reports coming out later on this week. Of course, we get our August crop production and our supply and demand reports coming out. Do you think trade is already focusing on that, kind of getting positioned ahead of that, or is it more weather related right now?
Well, it's a little bit of both. We're looking at weather here for the next several days. Looks like it's going to be favorable for development, but also, too, we do have the crop report out on Friday, and the trade generally is looking for the USDA to bump up their yield estimates. Just going to be a matter how much are they going to bump it up, because, you know, so far we've had corn ratings for 4 weeks in a row, 76% good to excellent condition. So I think USDA's got no choice. They're going to have to raise their yield estimate somewhat.
That's kind of rare to have ratings that high this time of year, isn't it?
Oh, it definitely is, but hey, we've got one heck of a corn crop out there. It's just been more or less like a greenhouse effect with the warmer than normal temperatures and normal to above normal moisture.
Now, in the soybeans, we have a firmer trade in the overnight hours and also this morning. Now, here we go. We currently have the August contract in delivery up 8 3/4, but September up 6.5. We have November 5.5 higher at 9.80. Now that's a penny from our low of the overnight session, but about 9 cents from our high. Now on the wheat trade, here we have Chicago September. If we can pull that up right now, it's trading 3/4 lower at 4.15 1/4. And Kansas City has September currently trading 5 1/4 lower at 406.5. A lot more pressure in Kansas City. Just wondered if you had a quick comment on the divergence there in the wheat.
Oh, not really. The thing you have to look about wheat, and that is the funds are short 705 million bushels. So with the market moving down on the Dees contract in Chicago to 426.5, we got a little bit of pressure on these funds here. Are they going to continue to hold those positions? You know, the market's not wanting to move lower here, and if it doesn't, they will look to cover some.
All right. Well, Dewey, I want to take a quick peek at our cotton market here, if you don't mind, and then we'll go into a break. Now, on the cotton trade at the present time, we'll take a look at our new crop December contract. Currently, we're down just 8 points at 76.66 cents per pound, still hanging in there fairly strong, although we did have a high overnight of 77.10, so we've fallen off of that by about ½ cent. We're going to come back and we'll talk more with Dewey Strickler of AgWatch Market Advisors, this time about livestock, when we come back right after this. We are back with you here on the Market Day Report. Thanks for joining us today. Now, we're talking with Dewey Strickler. He's with AgWatch Market Advisors, and he's based in Franklin, Kentucky. All right, Dewey, I want to take a look here at this livestock trade. Now, we are off and running this morning. We'll begin with this live cattle market. And in the early going today, a mixed bag. We have a little weakness here on the nearby contracts. We are trading August live cattle down 33 cents. Well, check that. Now we're down only 18 cents. at 117.50. These are live quotes direct from Chicago, so things can jump around a little bit. August had been lower when we first pulled this screen up, and now it has gone higher. So it ticked up, now 12 cents higher at 115.65 on the day. And now you have your December live cattle trading 27 higher at 115.95 so far. Now, interestingly enough, the most strength is seen in the deferred contracts. Some traders think that could be a little bit of a caution sign. We'll talk about that in a second. Now, on the feeder cattle trade, we'll flip over there. Now here we have the futures, the August up 90 cents. The September is now trading $1.20 higher at 148.40 on the day. And you have your October contract $1.07 higher at 144.95. If you throw out that nearby August contract, here we have more in the way of a leadership role being assumed by the September and October contracts, in effect the nearby contracts. So doing kind of a give and take here. One is being led by the front months, the other by the deferreds. Does that mean much to you in this early going on a Monday?
No, not really. When you look about what took place last week, I mean, you had cash traded higher here last week, and we do have the cash at a discount to futures, which is here somewhat a little bit supportive, and box beef was down on the week, so we got some mixed signals going on here.
All right, well, let's see how the box beef did end up. If we can take a look at USDA's beef cutout values reported during the afternoon hours on Friday. We had the choice cuts actually 26 lower at 199 even, and then you had the select cuts down 65 cents, so 190.20. So yeah, you're right, a little bit of pressure there. How would you rank the cash cattle activity that you did see develop last week?
Well, let's just say it's pretty much fair. You know, we're looking here, the Packers are trying to get some cattle bought here going into the Labor Day weekend, and after that develops, you know, we're going to be pretty much looking at a void of things developing here for a while. So I think, you know, really you just kind of look at this being mostly kind of routine, what we've seen so far.
Are you hopeful on the lean hog trade that maybe we can get some footing under this market?
Well, the market is trying to get some footing here, but the bounce off of those lows like on the October here, just around 57.50, looks to be more of a corrective bounce. So that being said, can't rule out the market going down, edging a little bit lower, making one more low before we finally put a bottom in.
Really? Okay. Well, Dewey, thanks for the comments. Appreciate that. October lean hogs are up 70 cents at $59 right now. Dewey Strickler is with AgWatch Market Advisors in Franklin, Kentucky. Great guy to talk to if you want some excellent market information. So, Mark, we are off and running, and there you have it.
Well, we go. Yeah, big week ahead of us. Thanks, Mark.